Hi folks, Scott here, and this is the wrap for Tuesday, October 22nd. Wow, an interesting and somewhat surprising day, I will admit. We put in a new 200-day high, new all-time high here in the cash index of the S&P 500. Fourth day in a row, actually, we've closed at a 200-day high close. That's pretty rare. It's happened 28 times in the past 11 years. But what I want to show you right now is going into tomorrow is what are the odds for fading a gap following at least 3 consecutive 200-day high closes. 3 consecutive 200-day high closes. We actually have one today. Let me show you what those odds are inclusive of today, which did not fill its gap. And I'll get to that in a moment. Happened 58 times in the past 10 or 11 years. Using an end-of-the-day stop, has above average win rate and above average profitability, and looks comparably attractive in both directions. Over 80% win rate. Odds slightly favor a gap down after 3 consecutive 200-day high closes. Average winner is about 3 points. It's a little bit smaller than most, but not terribly so. And as I showed the folks in the trading room, if anyone faded today's gap like I did and got stopped, check out the trade list here. I'm going to slide over. Actually, maybe I need to expand this. This is the column assuming 10 contracts are traded on whether or not you had a winner or a loser. So you can see it's just a really profitable strategy historically. Mostly wins, more than 80%. Look at this last stretch here starting in 2010. So 12/21/2010 was exactly 3 years. It was a 5-point loss. And then go from up there all the way down here. It had 19, by my count, 19 consecutive, 18 out of 19 winning trades with only one loser that was closed out at the end of the day for a half a point loss. It had been 19 trades without going a full stop out until today, of course. So a little disappointing, but you know, it was, again, they're not all going to be winners. It happens. You got to trade them. But going into tomorrow, again, is a pretty good setup using an end-of-the-day stop. Now, I'll rerun these numbers using MTG stop parameters, which is equal to 30% of the 5-day ATR, for our members in the morning and share those results. But I thought you may want to see that odds are we're not going to get any major action in the morning other than consolidation. So hopefully that's what we'll get. All right, so let me show you what the data look like going into today. We end up with sizable gaps up today, actually. Per the worksheet, any gaps that opened above the prior highs were historically attractive. Because I'm showing you that my worksheet. Worksheet is just a tool I use to average the 8 individual gap guides from our database. And you can see historically opening above the highs, which tends to be a problematic zone, 61% win rate and a 1.56 profit factor. This is actually, by the way, a UH zone or DH zone, right? All of this does is group the indices into these the gap zones, into these 4 different areas. So that was tradable for sure. A little bit weaker if it opened below the highs, a little bit more problematic. No unique day factors. Granted, today was jobs report day. It was released today. It wasn't the normal jobs report day. But generally it's positive for shorting up gaps as well. After a false down day above a 10-day moving average in 200, historically attractive. I'm looking for 61.3, so right at my criteria there. Up gap after most narrow range day past 7, and similar market conditions, also very attractive. Not a whole lot not to like, folks. So my comments this morning, I showed last night's wrap, up gaps after NR7 and a 50-day high close when above the 200-day moving average. Solid, strong numbers. Fading medium and large up gaps. That's my new way of just describing greater than 40% of the 5-day ATR. You'll understand what I mean by that when I launch our closing guides, which I'll talk about later, but that'll be within, gosh, I've been saying this weeks now, 4 weeks, but it will be literally a couple weeks, it looks like. So, and you can see here, those are good numbers as well. So mostly attractive odds per the gap guides today. Unique day and pattern data, positive. Futures just sell off a little bit, so a little bit of closing variance there. key concern was these mixed opening zones. We did have some opening in weaker zones today. It's a little bit tougher to interpret the data. Wasn't as consistent of a setup in that regard. And the gap size, which I didn't mention, but gap size, as I explained in the trading room, anytime you get greater than 40% of the 5-day ATR, you have to discount the win rate a little bit in your mind. But it was going to be a good payoff and still attractive setup. And oddly, today was better. The bigger the gap was up, was my thinking. And most of the time that holds true. It did not hold true today. So this is where we closed yesterday, the consolidation. You could even argue there was a bull flag there, which is neither here nor there. But that's today's crazy action in the S&P. Blue line represents the prior day's close here. So you can see we did not fill the gap at all. And Russell did, or missed it by a tick. For all intents and purposes, I consider that filled. NASDAQ, which helped stop me out, was really, if it had just, a big part of the problem this morning is it led things higher. Ultimately rolled over and filled. And then the Dow was very bullish, looked the most like the S&P like it normally does. So I stopped on the gap trade. I did do an end of day gotcha trade, lost a point on that. Actually, the very low of that tiny little wick right there at the end of the day just didn't work. That's the good thing about the gotchas. They don't work, you only losing 1 or 2 points, and your payoff is normally twice that. So I did share in the room that one of the reasons it didn't work was we were below the morning highs, and those just don't seem to work as well. I wish I had some data to share with you. I don't. Just anecdotally, I've just noticed they don't work as well. So anyhow, that was my day. A little frustrating, but you know, I would do it all again. It was a regret-free day of trading for me, and that's always good. That's all we're trying to aspire to, and just let the long-term historical odds work in our favor, and they do, and they will. So there you go. That was my day, and that is the wrap for Tuesday, October 22nd. Have a good one.